Let's talk about the markets in 3 minutes, and we'll pick up where you left off just there in terms of the stocks over in the United States. Yesterday, I saw an interesting piece. Bank of America, this got a lot of play, doing their usual survey of investors, and that returned a conclusion for them that this was a market that screams capitulation. Doesn't sound, from what you just said, as if you would agree with that analysis.
It's actually interesting. I saw the headlines we got out of the Bank of America report saying complete negativity, cash levels high. One of the other parts in the report, if you went through the details, was actually the fact that we're not seeing major outflows from stocks. So yes, there has been a decline in kind of holdings there. There's an upward ratio of kind of cash holdings. But we're not seeing this major kind of outflows that you normally get when real capitulation. So even Bank of America themselves said, hey, it looks like we've got a bit of a short-term capitulation. We can get a bear market rally. But they said they think the big low in this cycle comes in 2023. And I hate agreeing with people, but I'm 100% aligned with Bank of America here. I believe in a bear market relief rally over the next couple of months. I think we've got an appropriate amount of pricing in the rates at the front end for now. I think the real negativity comes next year when they realise that, hey, the US economy justifies even more rate hikes than a price. The inflation problem is even more persistent, and that becomes even more negative for equities next year. And it's next year that earnings will get hurt when consumers stop spending. So I'm with Bank of America. Short term, sure, tactical capitulation. We can see a tactical rally. We've already seen one quite powerful this week, continue a bit more, but over the next 9 months, we are going to see much lower US stocks again.
OK, I just want to return to the subject of the UK and the pound, Mark, because as we've been talking, the pound has been weakening. And, it says something. I'm taking some time to catch up, aren't I? Because I was looking for, on a hot inflation print, maybe the pound will go higher, expectations that the Bank of England does hike more. But, of course, that's not a story that we should maybe attach, or a link we should attach to the pound. That link between central bank policy and the currency has broken down in recent months, something we've talked about before. And so the market is selling the pound, seeming, to focus on a weaker outlook picture, a growth picture from here.
Yeah, well, it's just this really difficult kind of trifecta, this idea that, hey, look, we've got this current account deficit and we've got deeply negative yields. How do we fund that current account deficit? Well, we have to offer attractive yields. So that means yields need to go much higher. But if yields go much higher in an economy in recession, that's just going to send it into a deep, deep depression. So maybe if we can't get yields higher, and that means the only outlet then for the stress is currency weaker. In reality, how does this play out? I think we go back and forth in waves of major currency weakness, waves of yields higher. But ultimately, it needs a correction lower in the fixed income UK assets. It does not feed through to stocks. Remember, the FTSE gets a lot of its revenues globally as the sterling weakens. It can benefit the FTSE. That's already weakened a long way. So I think there's an argument that's more bullish on FTSE, even as you could be very negative on gilts and pound over the next year.
OK, and very briefly, Mark, why are you seeing more opportunity in Asia FX right now?
The core part of this story here is that commodities have pulled back a long way over the last 2 months. And I think particularly energy prices. And many of the big economies here are major commodity importers. Whether you take China, India, Korea, Japan, these are all massive commodity importers. So I think there's a real pessimistic story, and it's valid. I just think that it's fully priced, and people may haven't realised how much commodities come down. So we might get a bit of a relief rally, not a change in trend.
OK, thanks for that. Thanks to Mark for thoughts so far. Remember, you can get up-to-date analysis and insight from Mark and the rest of the Markets Live team. mliv Go is the function to use on your Bloomberg terminal.